The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here.
Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Alessandro Hatami, former Group Innovation Director at Lloyds Banking Group and currently Managing Partner at Forestreet. Alessandro brings a grown-up view to fintech. Working closely with incumbents on financial strategy, he has great insight into the way larger players are positioning themselves in a changing FS landscape. Today, we get into what big tech players are likely to do with regards to banking and what that means for banks. I assure you the conversation itself is much more interesting than this intro, which with reference to banks and banking sounds pretty dull. Maybe big tech will do away with banking as we know it and get rid of the term altogether. We'll see. This topic is so ripe for debate. Will financial services survive the arrival of social media giants? Let us know on Twitter at Rebank Podcast and at A. Hatami. Thank you very much for joining us today. Please welcome Alessandro Hatami. Alessandro, welcome to Rebank.
Thank you.
You are the managing partner, one of the managing partners of Forestreet.
I am indeed.
What does Forestreet do?
Forestreet is a new company that we've created because we thought that there's a missing link in the digital innovation market. Any company in the world today wants to build digital innovation, and they're finding out that they have usually three choices. They can actually buy something, they can partner, or can they build it in-house. Either way, they will have to work with a third party to help them do this, either being as a target of acquisition, or an agency, or a recruiter, or a training organization. What happens if a few years ago it was very clear who were the 5 or 10 companies that you could reach out to, today there's hundreds and hundreds of companies that are just as good as the well-known brands that are out there. And it will be very difficult to make a good choice if you don't have access to a whole of market view of who's available. So that's what we provide. We've created the equivalent of a headhunter that allows any of our clients to tell us exactly what they're looking for. We help them understand what their needs are precisely, and then we help them identify a long list of companies that they can work with, and then we make this short list, and then we help them choose the right one. We've created a database that now has close to 50,000 companies that work in the digital space, and we have mapped them on the specific ecosystems that can be AI or cyber, analytics, all the different areas that right now are of interest, and we help our clients find exactly what they're looking for, and they only pay us, and they know that we don't get any commissions from anybody we introduce. So exactly like a headhunter would operate.
Okay. So just to make things tangible, can you give us an example of what a project might look like? Just kind of a representative example.
Sure. One of our clients is a big bank in Spain. They were tussling with what to do with PSD2, and they came to us to help them find a API platform that would allow them to not only develop their own APIs, but also gain access to everybody else's APIs. They had a couple of companies in mind. Some of the big names, the three-letter names, companies were in this. We helped them create a list of 30 different vendors that at one end had the large corporates, the large global providers. At the other end had local players, local startups in Spain, and everybody in between. They made a choice that got this long list shortened down to 11 companies, and then they chose 2, and then finally chose the right one. With our work, they saved close to $3 million on the budget they had set out for themselves for this purpose. And it was a much more accelerated process, and they make a decision that is absolutely fit to their requirements. Mm-hmm. So exactly like a headhunter would do. And our value add in that case was speed, the choice, the awareness that you're choosing the right company for what you need, but also savings, huge savings.
Yeah. And one of the reasons I think that you're particularly well placed to advise banks on this is because of your experience at Lloyds, I believe it was, right?
Absolutely. I've been doing digital change for a long time. Lloyds was my latest large corporate I work with. I started off with digital in 1999. I built GE Capital's first European website many years ago. I then spent quite a few years at PayPal. I was employee 11 in the UK. I was the managing director of PayPoint.net, an online payments company, and then I joined Lloyds as the CEO of digital banking, and then became the group innovation director for them also.
Wow. So one of the things that you and I have talked about offline, which I wanted to pick up now, because I know you have particularly relevant insight here, and I think you probably spend a lot of time thinking about it, not least in the context of your work, is around the likelihood or not of some of the world's largest tech players eating finance, eating banking, financial services. You kind of hear from time to time about how GAFA's gonna take over the world of banking. It's kind of funny to hear, because then you talk to people in, I don't know, the pharmacy industry, and they're concerned that GAFA's going to take over their business, and the car rental industry and the hotel booking, whatever industry you're currently working in. Everyone's afraid that Facebook, Google, Amazon, Alibaba, Tencent is about to disrupt their business. I'm sure in many cases those people are right. If you look over the past 10, 20 years, that some of the industries that have been disrupted by big tech and what's remained for the incumbents, it's a bleak picture if it does happen. In your view, how are things likely to transpire in banking and financial services with regards to the arrival of big tech?
I think what's becoming really evident in the digital world is that understanding the customer and be able to serve the customer where the customer wants to be served, understanding not only the UX and the EX, so user experience and customer experience, but also understanding the motivation and fitting within the customer's life is the key that actually drives adoption of financial services. In the past, that was watered down. So financial services providers think of themselves as retailers that sell loans and mortgages and extensions to your overdraft. But customers don't think that way. They don't think about financial products. They think about end outcomes. So I don't wake up in the morning dreaming about a credit card. I wake up in the morning dreaming about going on holiday. And the credit card is a means to that. What the likes of GAFA have understood is that they are able to provide a whole series of services to the customers because they have become part of the life of the customer. So a lot of people right now engage very much on these social networks for their everyday needs. And the social networks want to remain the key point of reference for these players. So it's the logical next step, after having engaged with all the selfie videos that you can put in and all the messages that you can send to your friends, is to say, how can I extend my relationship with the client, with the customer? And I do it by providing a financial product. And you see a very good example of this with WeChat in China, where they started off by being a traditional social network a la Facebook. And they started adding services that can be bought on the platform through very simple interaction, just by choosing to do so. And the financial service has become something in the background that enables the customer to live the life that they want to live. Now, today, the GAFAs that you mentioned, each one of them have a different incentive in actually developing these type of services. And the interesting thing is they are able to do that today because of the drive for the opening up of the banking APIs. So through APIs, in theory, Facebook tomorrow could provide you a really good interface to the banking world without being heavily regulated as a bank would be, and by providing a very rich solution for you that is embedded within your life. So why would Facebook do that? Because of the banking revenues? No, because they want you to come back to use Facebook more frequently so that they can sell advertising, sell your data, et cetera, and make money out of the fact that you're on Facebook. So that said, they are willing potentially to forego some of the revenues that are generated by the financial product and give that as almost for free, just for the fact that you're going back to them. Similar story for Apple. The only incentive there is they want to sell you more boxes for Apple. The same incentive for Google, because what Google will want to do is to make sure they complement your search data with your transactional data. And for Amazon, because they want to go deeper and deeper with your purchasing activities. So what's interesting, what's different about these guys compared to the fintech startups is that, one, they understand the customer very well. Two, they have a brand recognition. Three, they have all the skills and necessary to create the most beautiful user experience and customer experience that they can create. And lastly, they have tons of money and tons of customers. And they become a formidable challenger to this, to the financial services providers.
Wow. Okay. My mind is spinning as you're talking here. And it's interesting to think about the success of... So we're sitting here in central London, where we're both based. And it's interesting to think about, for instance, Oak North, who's a new UK challenger bank. They basically write commercial loans to companies. A lot of it's property based, and it's in the single and double digit millions. They take retail and I think business deposits online, self-service. Savers can put their money to work, earning a bit more than what the high street banks will pay them on their deposits. And then Oak North can, in a very infrastructure light model, lend that money to businesses. So a banking license allows you to take deposits. Consumer lending is regulated. Commercial lending is often unregulated.
Less regulated.
So what does a bank do, and why would you need a banking license? Well, it's to capture that net interest margin between what you pay on deposits and what you earn through the loans you make. Banks have traditionally looked to capture the entirety of a customer relationship by offering a current account, so they could then kind of upsell and cross-sell fee-generating products. In the world you're describing, maybe a Facebook or Google replaces that transaction banking component, and banks are kind of stripped back to that deposit taking and lending institution.
Yes and no. What I'm thinking is the infrastructure of the current account in some form or shape, or what the services provided by current account, will remain. All of the other products will remain. The only thing is the GAFAs of this world will create a layer on top of that relationship. So de facto, what they're doing, they have only interest in disintermediating the relationship. They don't have the interest in breaking the relationship. Because, as we said, the end point is not the financial revenue. The end point is the relationship with the customer. So that they can expand on the user experience, the relationship they currently have with the client, with their customers. That said, it may not be terrible news for some banks, because some banks may say, you know what, I will get rid of 2/3 of my cost by getting rid of all my front end, and I will become just a back-end provider, become a commodity provider of the service. I don't think many banks would choose that route, but it's a route that you could choose, and it would make you, at least in the short term, incredibly profitable.
Yeah. Well, I guess the question is, will banks have the opportunity to choose that, or will they be forced in that direction? So you have Clearbank now in the UK. I think they're launching in earnest in 2018.
Yeah.
Very infrastructure efficient, tech only connections to all the payment schemes. So basically, if you want to do your payment processing, whether you're an existing bank or another financial services company, you can push it all through Clearbank. You don't have to run it yourself.
No.
The current account checking account, U.S. terminology, is generally understood to be very costly for banks to run. Free current accounts here in the UK, it's basically a loss leader to get customers to whom you can then sell other more expensive products. I don't know. I could totally imagine a world in which that current account transaction banking component, which is basically just a payments piece and a ledger, moves somewhere else. The regulated deposit taking stays with banks, and a lot of that back-end payments processing moves to new players like Clearbank and those incumbents who are able to, I suppose, modernize fast enough to stay competitive.
Yeah, I think you're describing the world as it's shaping. You have the banks that have had this relationship with clients for a very long time, a one-to-one relationship, where they were able to manufacture and sell the products with a user experience, a customer engagement that it was their choosing to make. They are suddenly finding organizations that come and create a layer between them and the customer. They're also finding on the back end providers that are able to not have to worry about the legacy issues that the banks have and create the same exact products cheaper and more efficiently. So they are attacked in two directions. They're attacked from the front with the likes of the Monzos and the Starling that are creating beautiful user experiences for customers that will then be attracted to them and therefore be disintermediated from the banking relationship. And in the back end, you have fantastic new propositions. I'm always impressed by some of the very creative solutions that are developed on the back end. There's some amazing new banking platforms, Thought Machine, for example, 10x. All these guys are creating new banking platforms that will, at least on paper, be more efficient than the existing banks. So the banks are in between two hard places. They are bouncing off between that. That said, the banks are very big, and they have a lot of money, and they have still quite a bit of the customer trust. Trust that they will not go bust, and trust that the money is safe, not trust that the bank will do what's right for the customer, because that's eroded for what's happened in the last decade of scandals and so on. So I think the world as we know it is being challenged. So the banking world as we know it is being challenged from the front, from the back, and now from this new entity of these organizations that actually don't have any interest in replacing the banks. They just want to disintermediate them. And two, they want to own the customer relationship. So it's challenging times for the banks. And the thought that the banks need to have right now, one, is that they have to change all their backhand and improve the efficiency of how things are done. Two, change their product areas and how they engage with their customers. But three, rebuild that relationship so that you cannot recreate engagement with your bank by going through Facebook or Apple.
So you mentioned trust, and this is actually another topic that we've discussed, you and I, before. How much do people really trust their banks? Okay, so you say people trust their banks not to lose their money. I think largely that's the case. From time to time, there's some sort of, I don't know, hacking or data loss issue, or money goes missing on a one-off basis, and eventually the bank kind of makes you whole. Banks post their FDIC coverage on the front of their website, their financial services compensation scheme protection very prominently on deposit websites, because they're basically saying you don't have to trust us. You can trust the government to pay you back up to 100,000 euros in the case of Europe. So I guess as a depositor, in part I trust the bank, maybe, but more than that, I trust the government guarantee. If you ask me do I trust Google to retain my data, the answer is yes. I don't expect Google to lose my data. They've never lost an email that I've sent or received. Do I trust Google to prioritize my privacy and my interests? No. Do I trust my bank to do that? No. I don't know. It's kind of interesting to think about how that trust factor works.
I think trust splits into two parts. One is trustworthiness. So I trust that my money is safe. And there's an intelligent or the educated version of that, which is the FDIC guarantees and the government guarantees that you mentioned. There's the emotional one, saying Citibank's been around for centuries, I'm safe. That one, that majority of customers actually look at it from that perspective. There's the other dimension that has been eroded enormously in the last few years, which is that of, do I trust what the bank tells me is good for me? Do I trust that this mortgage that I'm being offered is the best mortgage for me? Do I trust that this card is the best card for me? And that has completely gone. So what you're seeing right now is that that's being replaced right now by voice of peers and where you can hear voice of others. And interestingly enough, these social networks are where you hear that voice. So that can be where you make your financial decision, will be driven by other people like you, things that Facebook could very easily organize and Google could do the same. And if Apple wanted, they could do also. So you go on Apple Pay and tells you, here is all the mortgages available to you. This is what your other Apple users are buying. And that would not be advice. That would just letting you know of a piece of information, which is very hard to say it needs to be regulated. So I think that is a major issue. The trust that the banks really rely on today and think that it's very hard to replicate, it's actually mainly inertia. And it's inertia and the perception that every bank's the same, so I can go through the hassle of switching, and it's not going to make that much of a difference. That's why these introductory fees of £100 for switching accounts are very helpful, because people change and then they don't care. They just don't feel that they get a special service. And that's what the likes of Monzo started going after. They want to change that relationship, which I think they're doing a good job.
Yeah. Apple pushed an update to at least its US users, which now allows them to send money in iMessage via Apple Pay. So I suppose most people out there will say, finally, we all saw this coming. though people make all sorts of assertions about what Facebook is going to do next and what Apple's going to do next, and sometimes those things happen. A lot of times they happen. Sometimes they don't. But this seems like a potentially a very immediately impactful development. So the likes of, I don't know, Venmo, which has been getting so much traction in the US, people are already using iMessage all the time, right? And now you're sending money. Is this like the turning of the tide?
I think payments is the first thing to move. I always like to kind of compare payments to the blood of an organism. So if all the other financial services are the brain and the heart and the lungs, etc., payments is the blood that connects everything together. So that's what enables financial services to exist as payments. So once you capture payments, once you own payments, adding the other services is relatively easier, for a variety of reasons that we can go into detail, but that's mainly the drive. If you look at what these organizations are doing, look at who they're hiring. Look at who are the recent hires of Facebook, who are the recent hires of Apple, what caliber of people are going into their financial services / payments world. And you realize that they are serious about this, and they are putting their money where their mouth is, or money where their intention is, because they haven't spoken about it yet. And you can see that they are going after it. Even Google has been playing around with financial services for a very long time, from Google Checkout to Google Wallet to all the other iterations of it. They haven't been very good at it actually they have been good at it, but the products have not been successful for a variety of reasons, but that doesn't mean that they are not going to go there again. So ultimately what will happen is the incentive for developing these financial services products is there. The first step in that direction is payments, and that's why they're all playing with payments.
Yeah. Well, it does see, and this kind of gets to the question of, will these big tech companies suddenly turn around one day and apply for, I don't know, banking licenses? Will they go for full authorization? And there are tons of reasons why they wouldn't. If you Google this, you hear basically everyone under the sun from outside of these organizations predicting what they're going to do and what they're not. And you make the good point, they've never actually said. What it does seem to me is happening and will continue to happen is that payments is an extension of a lot of what these companies are doing anyway. Lending, to an extent, depending on the company, is a natural extension. Amazon made headlines when they announced they had very quietly lent something like $1 billion to merchants, sellers on their platform. I mean, that's
PayPal
an obvious.
Cash Advances is another good example.
Right.
Yeah.
So those are obvious extensions of these companies' main lines of business. They are less regulated than the core banking business of deposit taking. It seems to me like you have to expect this encroachment on profitable and lightly regulated components of financial services by these companies who are not approaching it as we're going to take on banking, but they're approaching it as, how can we create a better experience for our customers?
How can we make our customers happier? Therefore, customers come to us more frequently, and therefore I will be able to cross-sell them what I really sell, what is my real product. That is the fundamental thing. We have an example of this. Look at the music industry. I think if you asked Apple, are you really interested in being a player in the music industry? The answer is no. So they went and they created the whole concept of iTunes and the streaming of music eventually after they copied some other things, not because they cared about music, but because they wanted to make sure that you bought their phones. And the same will happen to everything else. The objective is not the financial product. The objective is the relationship with the customer.
Yeah. Well, I'm sure if you talk to, I don't know, Canon and Nikon about how the camera industry has been disrupted by smartphones, I'm pretty sure the Sonys and the Apples of the world didn't attempt to disrupt the.
I don't think they really care about the high resolution of the images or the way that you can restore and change them. They care about the fact that you're taking those photos on their devices and you're distributing them on their platform. Mm-hmm. That's what this is all about. It's all about the customer relationship.
All right. So from a regulatory standpoint, how do you see things likely playing out?
Well, I was recently invited by the FCA to contribute to one of their initiatives, which is the Future Horizons. And we contributed a paper there in what we called the role of e-communities in the future of financial services. E-communities is a more polite way of describing GAFA, if you want. And the FCA especially is incredibly conscious that maybe they should have a role in regulating data and regulating the use of data beyond what the data regulators are currently doing. And they realize that has itself a value and it's becoming a currency like any other, and has to be controlled. And consumers need protection on that, and that's why the regulator needs to be stepping in. The regulator steps in to protect people, not for any other reason.
So generalizing a bit, the application of new technology and data is going to continue to rock financial services. We've talked about how that could potentially happen through some of the tech incumbents. But I think we're going to have to come up with a cooler term for all of this than banking, because that just sounds so boring. And I don't think, firstly, no one wants to be in the banking business unless they're, living in the last century. Banking isn't cool. Like, what's cool is delivering something really new. But if we kind of take this to its natural conclusion, where a lot of the transaction stuff happens in, maybe a social media platform that you're already on, or in iMessage, lending happens through Amazon or PayPal. I mean, what does this mean for the traditional concept of banking? Like, you no longer go to one place for your banking. It's I
actually think you go to exactly to one place, but everybody's there to provide you with that service. I think that's going to be the future, and that's what a lot of the fintech challenger banks are doing. They want to be the one place you go to for all your financial products. What is interesting in my mind is that if I were to redesign banking today from zero, I would be thinking, okay, asking the customers what their requirements are, and you fundamentally find out that they only need three things. They don't need a variety, too many products. You just need three products. Product number one, they want to be able to pay somebody. And they want to know that I want them sending money from Alessandro to Will. What is the cheapest, fastest way to do that? And do you want somebody that tells you today, if you go through the MasterCard network, is cheaper, tomorrow use TransferWise? And that is what I want to be sure. And I open an account with a bank, and I have access to everything from iTunes to Apple Pay to different cards to diners, etc., all China UnionPay, JCB, all of them included. So that's one dimension. The other dimension is I don't have enough money, and I need to get a bit of extra to enable me to do what I want to do. What I want to do could be have a nice weekend this weekend, or buy a home, or buy a car, or et cetera, et cetera. So it's a lending, a credit solution. And the credit solution is always the same. It's, do you, bank, think that I will pay you back? And if not, what assets can I put into that so you're sure that I will pay you back? And if I don't pay you back, you can seize those. It's a very simple proposition. It's always been the same. So that's the second need. And the third need is I have a bit of extra. I want to protect it. And I want to make sure this bit of extra helps me in the future. And this protection thing includes savings all the way down to complex pensions and investment products and so on and so forth. It's always the same thing. I have a bit of extra. I want to make sure this extra grows so that I can use it in the future. If banks start thinking along those lines, you can actually start recreating a much more richer proposition that it will be very hard for a customer not to go on the bank to do that, because every single product is made for them and everything is made for a segment of one, you. And digital technology allows you to do this today. And you could have, if you're a bank of 30 million people, 30 million different segments. They don't, because they're still wedded to the old models. And interestingly enough, this model of banking is the model of banking that you had in 14th century Genoa, when the bankers were engaging with their borrowers. It was a one-to-one relationship. And the product, the pricing, the conditions were designed specifically for the customer's need. Yeah. We have to go back to that. Yeah.
Okay, so I mean that seems to cover the customer need. It seems to me like the piece that's missing, though, currently, is kind of moving from what the customer thinks they need and what enables the customer to meet their kind of day-to-day requirements versus something that actually supports people in achieving better financial outcomes for themselves.
You're talking about trusted advisor.
Yeah. So back to your Genoa example, you had the one-to-one banker-customer relationship. You think about the tradition of Swiss banking and private wealth management and everything else, but if you can create a segment of one in terms of product, why can't you create a segment of one in terms of advisory?
And you can, and again, technology allows you to do that. In that segment of one that we described in the 14th century Genoa, the two parties had a benefit in the transaction to be healthy. So if the bankers knew the person, the client that they were working with, because they know their family, they know their kids, they know where they live, they know their father, grandfather, great-grandfather, they know what business they were in, etc. And the borrower, the client, knew the banker, and they lived in the same society. So if the banker took advantage of the consumer, of the user, of the client, their name would be destroyed, and therefore the business would be completely wiped out. We are living in the same type of environment. So we need to recreate that trust relationship, which is based on transparency, and that digital can provide. It will be a better day for everyone, bankers and consumers, when that happens.
Yeah. I mean, it's amazing to be living in this time, this moment in time, and watching all this unfold around us.
I could not agree more.
Alessandro, what's the best way for people to find out more about your work and connect with you directly?
Well, the best way to do it is through our website, which is very simply forestreet.com, or reach out to me directly on LinkedIn or on any of the social networks we've talked about so much today.
All right. Alessandro Hatami, thank you very much for joining us today.
Thank you.
Thanks for tuning in to Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.